The Republican tax reform plan would be hurtful, if not devastating, to working families in Illinois. By eliminating certain deductions, they will compound any tax increase that Illinois families currently face. When we take a look at the average family of four in Illinois, average income, average home, and measure the impact of Republican tax reform, their taxes will go up, and in some cases significantly. And one of the major reasons is the Republicans in Washington are proposing that the residents of Illinois and people in like circumstances pay a tax on a tax. Today, if you pay a tax, you can deduct that state and local tax from your income when it comes to your federal tax liability. They eliminate that deduction. And by eliminating it, when you pay $1 in sales tax in Illinois, or $1 in property tax, or $1 in income tax, that dollar is subject to federal taxation under the Republican tax reform plan. Now, that is not a fair thing for families in this state. And Illinois happens to be one of the top 5 states when it comes to the deduction for state and local taxation. So you look at it and you say, well, clearly there must be other parts of tax reform that will help families. Yes, in some circumstances, some families may be helped. For example, if it's a small family with no children or only one child, perhaps they would come out ahead in one category or another. But for the average family of 4, average income, average home in Illinois, this elimination of the state and local tax deduction means their taxes will go up by one calculation over $800 a year, $800 in additional federal taxes. So who's getting a tax break as a result of the Republican plan in Washington? No surprise. Those at the highest income categories, income that is dramatically higher than the average in Illinois, are going to see a decrease in their federal taxes. Is that what we want to achieve here? I think not. And when we take a look at the overall tax reform plan from the Republicans, we find that it cannot help but add to our national deficit, the burden of debt which our children will carry forward after we're long gone. That's why we need to take an honest and careful look at these taxes. When I heard about this and the impact, the negative impact on Illinois of the Republican tax reform, I said I need someone who can analyze the numbers and come up with conclusions, and there's only one person that I respect to do that in a comprehensive way over and over, year in and year out, and that's Ralph Mortier. I'd like to introduce Ralph.
Thank you, Senator. I'm Ralph Martiri. I'm Executive Director of the Bipartisan Center for Tax and Budget Accountability, and I'll make it clear we're bipartisan. And so when we look at these proposals, we just look at them from whether or not they're a good public policy for our country, our state. We don't care left wing, right wing. We don't look at ideology at all. A couple of things about this current, what's called tax reform proposal that really stand out. First, as Senator Durbin said, the state and local tax credit. That goes all the way back to the inception of the federal income tax in 1913. Why? They recognized when they drafted the federal code that a taxpayer can't spend the same dollar twice, once to pay their state and local taxes and once again to pay their federal taxes. But by pretending you have this income available after you've already spent it on state and local taxes, they're ignoring that very simple reality and, in effect, as Senator Durbin said, taxing a tax. It's really poor public policy, especially when you consider how fiscal federalism really works. Everyone knows there's a number of unfunded mandates that flow from the federal government on down to the state level, right? Everybody knows that. Let's just pick one for special education. That's about a $50 billion cost, unfunded from the feds down to the states. The states make up for that through state and local taxation. You mean to tell me it's the right thing to do to now charge taxpayers who are covering this cost that's a federally imposed cost? Again, it just makes no sense. Bigger picture, the proposal that's being put on the table is really poor economic and fiscal policy. I mean, we're talking about a tax cut that overall is going to go disproportionately to the wealthiest 1% in this country. Over half of it is going to the top 1%. That is not going to stimulate economic growth for one real simple reason. Our economy, economic growth in general, is based on consumer spending. Who are our goods consumers? They're low and middle income families. Why? They don't save. They don't save for a real simple reason. Since 1980, after inflation, the actual earnings of the bottom 90% of America have been going down. Their actual purchasing power has gone down. So that's who you want to give tax relief to, the bottom 90%. Because when they get that tax relief, they have a high chance they're going to spend it and spend it in the local economy. That creates jobs. That's a stimulus. When you give it to the top, they already have significantly growing real incomes over time. They are spending everything they want to spend. They're not going to spend this extra tax relief. So in fact, what you're doing is you're taking federal tax dollars that could have gone to supporting anything, education, healthcare, defense, and shifting it to the pockets of wealthy individuals who aren't going to spend it. Not only won't that create jobs, it'll be a net negative multiplier on our economy. It will cost us jobs. And if you don't believe that, just look at the history of supply-side economics. I mean, we were promised by President Reagan, by George W. Bush, that when they would cut taxes, which they did, it would stimulate significant growth in our economy. Didn't happen. The Reagan growth, in particular, was mostly due to low interest rates and enhanced government spending. It was not due to the tax cut. Under George W. Bush, the economy not only didn't grow, it flattened out and declined. There has never been any data that support the argument when you cut taxes, the economy grows significantly. And in fact, every peer-reviewed study of this subject comes up to the same conclusion. Tax policy does not have a statistically meaningful correlation to enhancing economic growth. This tax cut is not only focused on the wealthy, it's focused on businesses. It's expected to cut taxes for businesses by some $4.1 trillion over the next 10 years. $4.1 trillion. That won't stimulate any economic growth for a number of reasons. If businesses wanted to create jobs right now, they'd be doing it. They're sitting on $1.84 trillion in reserves today, and interest rates are low today. If they wanted to create jobs, if they wanted to buy equipment, if they wanted to do research and development, they have the capacity. If they're not doing it, it means there's no demand for them to do it. Giving them a tax break doesn't create demand for them to spend their money. A business is not going to add on extra capacity that's wasted capacity because you give it a tax break. They're rational actors. They're going to profit take and once again distribute that money back up to top income classes. In other words, there is no rational basis to believe that any of the policies contained in this proposal will stimulate the national economy nor help taxpayers. It's bad for the state. It's bad for the government. Hopefully, no member of the Illinois congressional delegation will support it.
Thanks, Ralph. Glad to answer your questions. Great.
Well, obviously, in a Republican-controlled Congress, the issue is whether your Republican colleagues are hearing similar complaints from their constituents, and if you're sensing any mood to change at least the tax deduction for state and local.
Well, let's start at the top. The president, during the course of his campaign, said he wanted to focus on working families. And in fact, they're falling further and further behind, that they don't have adequate income to meet their current needs or save for the future. There's nothing in this proposal in this tax reform that addresses that. In fact, just the opposite. It ends up imposing a new burden, for example, on working families in Illinois, middle-income families. They can no longer deduct their state and local taxes from federal taxation. So let's start there. From the president's own viewpoint, it doesn't serve the promise he made during the campaign. The second thing is there are some real deficit hawks, genuine deficit hawks among Republicans. Bob Corker of Tennessee said he wouldn't support any tax reform that added a penny to the deficit. Others share that feeling. So when you get down to the real calculation of the impact of this tax cut and the growth of the deficit, there are going to be some conservative Republicans, fiscally conservative Republicans, who are going to reject it. So I wouldn't say this is a given at all. And unless and until they sit down and seriously look at this tax reform, the impact it'll have on the economy, as Ralph went through it, as well as our deficit, as well as the incomes of working families. When they seriously do that, and people tune into this conversation, they're going to have to change.
What's your fear, though, that having failed to deliver on health care and some other things, that the Republicans in Congress are going to feel compelled to deliver something on taxes?
taking nothing away from St. Mary, this is a Hail Mary pass by the Republicans. After they have failed to come through with this health care reform, failed to come up with a replacement that is as good or better than the current system, they are gathering all the players on the field for this tax reform, this big push, and saying no questions asked, we've got to pass it, take it or leave it. That's easier said than done. I've watched this process before, and when it comes down to it, and you look at the honest impact on businesses as well as on individuals and working families, I think they're going to find that the support for this, even among Republicans, is going to diminish.
The businesses are the ones who pay for campaigns.
Well, of course, and some businesses will profit from this, others will not. I don't know Ralph's experience. My experience in going around meeting the business leaders in Illinois is when you ask who pays the highest corporate tax rate, it usually ends up being medium and small businesses as well as retailers. You know, the biggest corporations have zero tax rate because they have a tax code that's loaded with exemptions and deductions and exclusions. So even the business community, I think, is going to be hard-pressed to say this is a business incentive. We're at a moment in history where, as a percentage of gross national product, we are witnessing the highest corporate profits in the history of the United States. We're also at a moment in history where, as a percentage of gross national product, we are seeing the lowest corporate taxes paid in history. And the Republicans have responded by saying, well, let's cut corporate taxes some more. If you want to help working families, that is not the key to it. Yes?
What would you say to voters who may be experiencing tax fatigue to explain to them why this plan isn't competitive?
Well, I think if voters take an honest look at their tax returns, particularly in Illinois, I don't know the percentage in Illinois that itemize and claim this deduction. About a third of the taxpayers in the state, when they take a look and consider that they're going to lose this deduction, it means somewhere in the range of $12,000 to $13,000 of current income that is subject to this deduction, and their tax rate applied against it. So it's a real loss for them.
Yeah, in fact, to support that, nationally, it's going to shift $1.3 trillion over the next 10 years in tax burden to people who lose this deduction statewide. That's a big shift down to people, and it's hard to justify, given as Senator Durbin said, they're already spending that money to cover the state and local taxes.
And we have just witnessed, we had a budget agreement, thank goodness, I think it was important, and an increase in the state income tax. Now that increase in taxes is going to be taxed by the federal government. So it's a double hit on families paying the income tax. That's one illustration. It applies to property tax, applies to sales tax. So I think people get it. When you say we're going to tax a tax, people say, wait a minute, that's not fair, and it isn't. Okay? Thanks, everybody. Thanks, Ralph. Appreciate it. Well done.